Hello, this is the trade site Forex market preview and international economic data roadmap for the week beginning Sunday, the 21st of February 2016 and ending Friday, the 26th. We had a good trading week. A little slow week for Forex, actually. We had some excitement early on, and then we had a holiday on Monday, of course. So it was a short week here in the U.S., and then the last 4 days were very narrowly contained. Here's the U.S. dollar index daily chart, as you can see. Last 4 days basically the same, so that doesn't make for much excitement in your trading, of course. So one of the slowest weeks of the year so far. Here's a look at the euro dollar, also very contained. Notice the 13 sell signal back about a week and a half ago nailed the top just like we thought it would. Amazing how that works. The pound dollar, also very flat and has been stuck in about a 400 pip range for a month now, which is not much for the pound. Here's the Aussie, also very narrow. We need something to go on in the macroeconomic world or something. This is just getting a little slow overall. Pound yen making new lows, euro yen making new lows, pound Swiss, not very exciting. And the New Zealand dollar also very flat. So I wouldn't say there's anything on the daily charts to point to and go, oh, this is what we need to focus on next week. There's just not much there. Here's the euro dollar. Remember, Monday was a holiday, so you can see last Friday's close, Monday's open. Monday actually had the best range of the week, even though the trading volume was light because of the holiday here in the U.S. And then from that point on, the entire week, Tuesday, Wednesday, Thursday, Friday, was in 120, less than 120 pip range. We'll call it 120 pip range for the whole week. That's supposed to be one day's range. So that's basically untradeable for the euro's perspective. Here's the pound. Total range for the week was more like 250 when you take out the Monday holiday. But again, most of the movement on Tuesday, that was exciting. Wednesday, really boring. Thursday, a little pop, came back. Friday, not very interesting. So, and again, once that move occurred Tuesday, actually, then the rest of the week, the last 3 days, was only 150 pips. So there's not much you can point to in a week like that and get super excited about in terms of the markets. All right, what do we have to look forward to the week ahead? Let's take a look here. So on Sunday, February 21st, we've got Japan's flash manufacturing PMI, New Zealand's credit card spending. Monday, Europe's flash, we've got all of it over the course of the night. You've got French, German, and then the broad European flash manufacturing PMI and flash services PMI. You've got Swiss PPI at one point. You got flash manufacturing PMI out of the U.S. In the morning at 9:45 a.m. Australia's CB leading index. Tuesday, German final GDP, some speeches, consumer confidence here in the U.S. at 10 a.m. Eastern Time Tuesday morning, along with existing home sales and the Richmond Manufacturing Index. Skip to Tuesday night. Japan's got their SPPI. Australia's got construction work done and wage price index. Wednesday, you've got Swiss's UBS consumption indicator, mortgage approvals out of the UK, the 30-year bond auction, CBI realized sales out of the UK. In terms of the US, we've got flash services PMI, new home sales, crude oil inventories, visitor arrivals out of New Zealand, private capital expenditure out of Australia. Going into Thursday, we've got German consumer climate out of Europe. We've got nationwide HPI out of the UK. We've got money supply and private loans out of Europe. We have the second look at GDP out of the UK. That's not a big deal. Final CPI out of Europe. We've got their retail sales. Going to the US, then Canada's got corporate profits. US has durable orders, the weekly unemployment numbers, housing price index, natty gas, trade balance out of New Zealand, Tokyo CPI, and national Japanese CPI at 6:30 p.m. Eastern Time Thursday night. UK puts out their consumer confidence. And then Friday, we've got Bank of Japan core CPI, German preliminary CPI, French consumer spending, Spanish flash CPI, Italian 10-year bond auction. Got then here in the U.S. preliminary GDP. That's the second look. Remember, we had the advanced GDP in January. This is for the fourth quarter. Core PCE price index, goods trades balance, personal income and spending, and revised University of Michigan sentiment numbers as we get close to wrapping up the month of February. Now, keep in mind, February is a leap year this year. It's an election year. It's every fourth year. It's a leap year. And so Monday is the 29th, and then the month ends. So that's about it. There's none of our big three data points this month or this week. There's no GDP that matters. There's no Fed meeting. So it's a straightforward trading week, but it's a full 5 days this time. And there's a lot of data coming out globally. So hopefully something in there will be enough to get these markets moving or doing something, or maybe we'll get some action internationally that'll excite us. But right now, obviously, this is just coming off a very slow week. You'll notice, by the way, laugh a little bit. Here's the dollar index again. That 9-bar startup phase that ended last Thursday, the prior Thursday, was the low. So we're just kind of winding back and forth between 9-bar startup phases. They're almost always the high and low here on this chart. It's pretty amazing. Charts, as usual, brought to you by eSignal 12. If you've not taken a trial of our services, feel free to do so. We will help you out for a couple weeks in whatever asset class you like. And we hope to see you in the trading lab. Have a great trading week.